Welcome back, traders. Some markets were rocked last week after the US economy added just 73,000 new jobs in July, while readings for June and May were also revised sharply lower, indicating double-digit increases as well. Of course, that raised fresh concerns about the health of the US labor market, but what really caught traders off guard was President Trump's sudden firing of the Bureau of Labor Statistics chief, accusing the agency of data manipulation. And on top of that, a surprise resignation from a Fed board member has opened the door for President Trump to further influence monetary policy. Well, the US dollar sold off hard on the news, but we have more events this week, including the ISM services PMI figures, more Fed speakers, and the Bank of England's policy decision. So volatility is far from over, and at this video I'm going to break down three key markets: dollar yen, pound dollar, and Bitcoin against the US dollar. So let's get into the charts, and let's first have a look at dollar yen, which lost more than 2% on Friday following the disappointing non-farm payrolls report. We can see that the price is currently trading below its 202 20-day moving exponential moving averages. And given the negative slope in the technical indicators, there is a risk for further weakness. Of course, if we look at the RSI, the indicator is still around its 50 neutral mark, so we can say that the bias is neutral to bearish, specifically as long as the price keeps trading around the support trend line near which coincides with the 38.2% Fibonacci retracement level of this downtrend at 147. If the price fails to hold above this trend line, I expect more weakness, particularly if the price also falls below the 50-day exponential moving average, currently seen near 146.25. So in this case, we could see a sharp decline towards the 23.6% Fibonacci mark, as well as this tentative support line, both seen between 144 and 144.35. Well, as regards the ISM services PMI numbers, of course, the employment index will attract the most attention. Overall, the index is expected to show an improvement within the growth territory. But given the negative surprise in the ISM manufacturing employment index, that has increased the case of a disappointing employment print when the data come out on Tuesday. So if the employment index surprises to the downside, we could see the US dollar extending this sharp downfall. However, if the data surprise to the upside, and from a technical perspective, if the price manages to hold above the support line, I would like to see also a clear close above the 200-day EMA at 147.85 to target the 50% Fibonacci of 149.14. And probably if that proves easy to overcome, all the attention will turn back to the 151 and 151.60 zone, which includes the 61.8% Fibonacci mark, as well as this resistance line over here. So overall, downside risks haven't really faded in this market. Nevertheless, if you look at the market trend, we can see that this has been improving since July. We have a new series of higher highs and higher lows, so it will be interesting to see if that upward trajectory will be sustainable in the coming sessions. And now looking at pound dollar and the Bank of England's policy decision, the Bank of England is expected to cut interest rates by a 1/4 percentage point to 4%. Inflation is also very close to that level, slightly below 4%, and that kind of contradicts the expectations for a rate cut. But given the slowdown in the British economy, the political concerns, the political uncertainty following the conservatives, following the defeat of the Labour Party in Downing Street, as well as the falling, as well as the weakening labor market. Well, that all could justify another rate cut this month. However, whether policymakers will keep calling for more rate cuts, so that remains to be seen. Any signals about quantitative tightening, that could also move the market. So it will be a volatile session on Thursday when the central bank meets. In the meantime, we can see that the technical picture has deteriorated. We can see that the price has printed a bearish head and shoulders pattern, and well, below the neckline between 1.3360 and 1.34. That's where the 23.6% Fibonacci retracement level of this applet is located. So that downfall has increased the risk of more lower highs and lower lows, but the 38.2% Fibonacci mark of 1.3140, which coincides with May's floor, that brought some relief. We can see that the price managed to rebound here on Friday, and what remains to be seen is whether that increase will continue back above the neckline. And in this case, if that proves to be, if the price successfully overcomes that barrier and moves beyond the 20-day moving average, we could see another test near the 1.35 level, perhaps slightly higher. This broken support trend line could also act as resistance near 1.36. 90, while higher than that, I would like to see a clear close above the 1.3640 to target again the 3-year high 1.3787. Now, on the downside, obviously an upside, some consolidation or some recoveries can be justified given the oversold signals coming from the stochastic and the RSI. Nevertheless, if negative pressures return with the price closing below 1.3140, the price could head towards the 200-day moving average near 1.2940 and 1.30, and closer to the 50% Fibonacci retracement level of this applet. Then below that, the 1.2870 could be another territory to watch before we head towards the March lows over here, seen near 1.2715 and 1.2760. And finally, looking at Bitcoin, well, we can see that Bitcoin has been has acted actually as a stock following the downfall on Wall Street. Bitcoin followed suit. It's currently trading around its 50-day moving average at 112,000. Interestingly, that area coincides with this support trend line over here, and that provides some optimism that the price could shift to recovery mode, particularly as the RSI and the stochastic oscillators down here are also trying to rebound from oversold levels. So an upside move for some consolidation can be justified in the short term. However, what would actually boost buying sentiment is a clear move above the 117,260 level and beyond the 20-day moving average. In this case, we could see a sharp and exciting rally towards the 127,780 and 130,000 territory where this resistance line is placed. So that would be a huge progress for Bitcoin if indeed the price manages to complete this, to break this bearish pattern over here, which personally it reminds me of a bullish flag pattern following this steep rally. So that could also be a bullish pattern, which may signal a bullish continuation once we successfully complete this this pattern above the 170,260 level. Now, in the bearish case where the price closes below this support trend line, well, that could drive drive the price towards the 104,750 and 105,770 zone. We can see that the former constraining line is placed here, and if we see more declines, then the next target could be the 200-day moving average at 99,420. So Bitcoin might be another interesting market to watch in the coming sessions. Perhaps we may see more volatility coming up. But in the meantime, keep a close eye on the calendar. So don't miss the ISM services PMI numbers on Tuesday, the Bank of England's policy meeting, and Fed speakers, which could also cause extra volatility in stock markets as well as in Bitcoin, which seems to have a positive correlation with stock markets. So thank you for watching, and we should have a great trading session. We'll be back on Thursday for more technical updates. So thank you for watching, and see you next time. Bye bye for now.